In the world of cryptocurrencies, the choice of where to buy, sell, and trade these digital assets is crucial. Two primary contenders dominate the landscape: centralized exchanges, or CEXs, and decentralized exchanges, or DEX. Each offers distinct advantages and disadvantages, making the decision of which platform to use a critical one for cryptocurrency enthusiasts. This begs the question: which type of exchange reigns supreme? The answer, as is often the case in the dynamic world of finance, is not so straightforward. It hinges on a careful evaluation of individual needs and priorities. Centralized exchanges, as their name suggests, operate under the control of a single entity, often a company. These platforms act as intermediaries, facilitating transactions between buyers and sellers. For newcomers to the cryptocurrency space, CEXs often feel familiar. They resemble traditional stock exchanges, providing a user-friendly interface and a range of features that streamline the trading experience. One of the key advantages of CEXs is their ability to handle fiat currency transactions. This means users can easily convert their traditional money, such as US dollars or euros, into cryptocurrencies and vice versa. Decentralized exchanges, on the other hand, represent a radical departure from the centralized model. DEXs operate on a peer-to-peer basis, leveraging the power of blockchain technology to facilitate direct transactions between users. There is no central authority controlling the platform, eliminating the need for intermediaries. This decentralized nature fosters a sense of enhanced privacy and security. Transactions occur directly between users' wallets without the need to deposit funds into a centralized account, minimizing the risk of theft or hacking. Smart contracts, self-executing agreements written in code, underpin the functionality of DEXs, ensuring transparency and immutability in every transaction. Section 4 CX, weighing the advantages and drawbacks. Centralized exchanges boast several advantages that have solidified their position as major players in the cryptocurrency market. Firstly, they offer unparalleled liquidity. With a vast user base and high trading volumes, CEXs ensure that orders are executed quickly and efficiently, minimizing price slippage. Secondly, established CEXs prioritize security, employing advanced security measures to protect user funds. They typically store the majority of user assets in offline cold storage, safeguarding them from online threats. Thirdly, CEX operate within a regulatory framework, providing users with a sense of trust and accountability. However, CEX are not without their drawbacks. The most significant concern is the inherent risk associated with centralization. Entrusting funds to a third party always carries a degree of counterparty risk. While reputable CEX go to great lengths to ensure security, they remain potential targets for hackers. Furthermore, CEX require users to relinquish control over their private keys, the digital keys that grant access to their cryptocurrency holdings. This lack of control can be unsettling for users who prioritize the decentralized ethos of cryptocurrencies. Section 5 DEX, navigating the benefits and challenges. Decentralized exchanges counter the drawbacks of centralization by putting users in complete control of their assets. DEX users retain ownership of their private keys, granting them full autonomy over their funds. This self-custody model aligns with the fundamental principles of decentralization and empowers users to be their own banks. Moreover, DEX offer enhanced privacy. Transactions occur directly between users' wallets without the need for extensive KYC/AML procedures that are often mandatory on centralized platforms. Despite their advantages, DEXs face challenges that have hindered their widespread adoption. One of the main hurdles is lower liquidity compared to CEXs. With a smaller user base and lower trading volumes, DEX may experience slower transaction speeds and higher price slippage, particularly for large orders. Another challenge is the complexity of the user interface. DEX often present a steeper learning curve for beginners, requiring a basic understanding of blockchain technology and smart contracts. Section 6. Finding your exchange, a matter of perspective. The choice between a CEX and a DEX is not about declaring one superior to the other. It is about finding the best fit for your individual needs and risk tolerance. If convenience, security, and regulatory compliance are paramount, a reputable centralized exchange may be the preferred choice. On the other hand, if privacy, control over assets, and the principles of decentralization resonate strongly, then venturing into the world of decentralized exchanges might be more appealing. Ultimately, the decision rests on a careful assessment of what matters most in your cryptocurrency journey.
Subscribe now for more updates on cryptocurrencies.